Hi, good evening all. We'll start the final session for today's conference. Now, I recognize it's a very intimidating thought that, we stand between you and whiskey appreciation later. So, we'll try to keep it punchy. So, we have a very interesting sort of topic. India, a new powerhouse in the making. Clearly, very topical. We've discussed this all day. And, phenomenal sort of messages that have come throughout the day. I mean, clearly India is at the cusp of huge change against the backdrop of this multipolar world. The country is starting to meet its economic potential, right? India's transformation, fueled both by onshore investments as well as offshore capital. I think this is really stepping up and moving on to a higher gear. We have a phenomenal panel here to sort of discuss what this means from an investor perspective. So just very quickly introducing the panel, we have Lakshmi Iyer, CEO, Investment and Strategy for Kotak Investment Advisors, Sankaran Narayan, Executive Director and Chief Investment Officer, ICICI Prudential Asset Management Company, Siddharth Dahiya joining us from London. He is Head of Emerging Markets Corporate Debt, Aberdeen Investments, based in London, like I said. Laura Akers, Managing Director, APAC Corporate Finance, Moody's Investor Service. She's joined us here from Singapore. My name is Kaushik Rudra. I'll be the moderator for today's session. I'm the Global Head of Fixed Income Research for Standard Chartered Bank. Now, a couple of housekeeping things. This session will be recorded, and we will be taking questions throughout. So please do send in your questions. Please simply scan the QR code that you should see on your badges, as well as I think it'll be put up on the screen to post your questions. Please do send in these questions. We'll try to weave in as many of these questions as possible into the conversation. So without further ado, let's jump into the topic. Again, clearly a lot to talk about, and I'm really excited to hear what the panel has to say. Now, I think one of the themes that has clearly emerged throughout the course of today has been India is one of the fastest growing large economies of the world. In fact, the fastest growing large economy of the world. It's exciting not just for India, it's exciting for the world. I think a lot of things going in India's favor, favorable demographics is often cited. A lot of things we can talk about here. But question really is, how can India leverage this huge opportunity that it finds itself? How can it sustainably get onto that 7% growth handle on a sustained basis, right? How can it genuinely become an economic superpower? It's really within India's grasp right now. What is needed to achieve these economic realities? What is, so what is missing? So we'll talk about these things. I'll start with Naren. I mean, Naren, your perspectives on this is clearly a wonderful opportunity for India. What do you think stands ahead of India? How can India take it forward?
See, I think India has done a lot of good things. If you see the last 5 years or so, the macro has been managed brilliantly. We have kept current account deficit under control. In 2020, we resisted the call of very large handouts, which the developed world did and is suffering at this point of time. Therefore, inflation did not go through the roof like what happened in the developed world. So you have a situation where fiscal deficit is high, but it did not shoot up through the roof like what happened in some of the places. So I think broadly we've kept the macro in good shape. Now you have to continuously make it easy to do business, and on the digital side we've done a lot of things in a very good way and help things. But this process of ease of doing business is never complete, and I believe that it is a process which has to be strengthened significantly. And I think whatever can be done digitally, I think happens in India brilliantly. So if you look at whether it is paying taxes or booking tickets or anything like that, I believe India has managed it brilliantly. But anything which cannot be done digitally and requires something physical, I think the ease of doing business part of it can certainly, there is scope for improvement. And can it happen in 3 months, 6 months? The answer is no. It is a continuous process. Is power supply everywhere in India far better than what it was, let's say, 5 years back? The answer is yes. And even if you look at this year, when we looked at the power companies, the amount of discom overdues has come down substantially. So I think this is a continuous process, and if you don't lose your way and again start increasing fiscal deficits and increase current account deficits and again go back to a situation where you start giving too many giveaways and that leading to inflation, I think what happens is the growth differential between India and the rest of the world causes some kind of virtuous inflow cycle, and that virtuous inflow cycle of FDI leads to further some kind of reflexivity, and that leads to a better situation. So whether it is 7% or 6%, we can all have a debate, but I think as long as you create the highest growth in the world for a large economy, that itself ensures that every top corporate in the world says that India has to do it. And if you look at the current account, it has been helped by the fact that India has established itself so beautifully in services that if you look at the kind of service growth that we have seen through GCCs, it is just outstanding. And every company, foreign company that we meet, if you go and ask what is the amount of people that you have in India, it is just shooting through the roof, because the quality of people and the price at which you get those people, you can't get anywhere else in the world. And that's where the virtuous cycle is actually playing out. So overall, it's a very healthy development. Are we yet there in physical infrastructure? Are we still there in manufacturing to the extent that we want it? The answer is no. In services, we are very much there. And will it happen in 3 months, 6 months, 1 year? The answer is no. I think it will take another 5 years. But the world needs China plus one, and therefore it will happen. But has India got to compete with the rest? The answer is yes. And that's where we are, work in progress at this point of time.
Thank you very much. I think you covered a lot of key issues that are, very critical, very important. Lakshmi, if I can take it to you, I think he mentioned digitalization. Obviously that's been one of the mega trends. So has energy transition, so has global offshoring. I think these are clearly been big themes in India's sort of service-oriented push that we've seen. Now, earlier in the day, Mr. Subramaniam mentioned that India, he does not just see India's GDP doubling. He sees it from, say, around 3.5 trillion to about 30 trillion over the next, say, couple of decades. How do you see that? And what do you see as sort of the milestones that we have to sort of, use to get there?
Sure. Thanks, Kaushik. And hi, very good evening to each one of you. You have to bear with us for 37 minutes more before you get into higher spirits. But if I tell you that all of you sitting in this room, you have a potential to double your $100 over the next maybe 6 to 7 years, and there is this one great stock tip that I'm going to share with you, then probably you might think it's well worth the wait. I had this conversation late last evening in Hyderabad. I came back very late last night, and this conversation I was having with this person, a client who is bullish about anything and everything that doubles, whether it's real estate, whether it's land, whether it's equities in Somalia, in Pakistan, in India, Afghanistan. He doesn't care. He just says, show me the money spinner. So I said, my name is Lakshmi. Lakshmi means goddess of money, but how do I really spin it to you? I don't really have a magic wand, but I will try to give you, a stock tip. And he got all excited. I told him that stock tip is the stock called India. Now, why I say that is, if you just scroll through the headlines, and if I take you through a chisel from top down to, going bottom, if you look at recessionary trends, just Google recessionary trends, countries, US comes, UK comes, France, Italy, you name the European countries, they're all there in the pecking order in terms of probability of recession, 70, 65, 50, 40. Where does India come? right there, at negligible, like 0%, or 0 is not statistically possible, so 0.1 or 0.2. That's number one. Number two is, where, are you reading this headline which says that India CPI, that is the inflation which is impacting you and me, is at, a 12-month or a 13-month or a 15-month low? Again, the answer is India. Where do you hear, the person, and I am a self-confessed Apple, addict, but where do you see the CEO of, Apple coming and telling you that the 49%, almost 50% of refurbished markets for Apple or iPhone is actually India, though officially we are not allowed to, India doesn't allow resale of old handsets. So I think all these clearly point out to the fact, and of course there are more headlines. I'm sure some of you have traveled from different locations, including outside of India. India's air traffic hit an all-time high. This was the headlines. Though you also read that rail traffic, has plummeted 20%, but that's aspirational India. So clearly, that 1, 2, 3 steps that India has to be taking towards reaching, that particular level, which Naren just spoke about and you alluded to, is all there. Now, India has the IQ, India has the EQ, which is the emotional quotient and the intellect quotient. Knowledge quotient, I think, Asia, and then within that Asia, India is the behemoth. DQ, I think digital quotient, I walk 7.5 to 8 kilometers every morning. I live in BKC. I go to, the seaside in Bandra West. It's more colorful and nice there. I go and have one nariyal pani, coconut water, after my walk. That's my energy booster. I pay $50 and I don't have cash. This is my cash. Earlier, I used to have a credit card. I've stopped that almost, like apart from transactions online. This allows me through UPI to make a transaction to a person on street who barely knows maybe A to Z, 1 to 100 and beyond. And there, at $50, I have transacted. From there, I don't have a car, I don't have a driver. I take an auto rickshaw home. Try it, it's good fun. I take an auto rickshaw home. It's exactly a 9-minute drive. And after that, I just ask him to give me his UPI and I do the transaction. Again, Sarka, last week when I was in Dubai, we met, we were meeting all the foreign institutional investors, including sovereign wealth funds. And one person tells me, to transfer money from one bank account in the US to another bank account, it takes 3 days. 3 days. And I'm not exaggerating. And here, you can transfer money from one bank account in India to another. I'm exaggerating, but virtually 3 seconds. The money gets transmitted. I think that is where India has transformed in the digital landscape. Of course, I'm not saying that we need to be complacent, but I think a combination of IQ, EQ, KQ, the knowledge quotient, and if I superimpose the DQ, I think you have the perfect recipe to ensure that this stock called India compounds. And this compounding, mind you, is not magic. It is pure math. So I think it's clearly doable as long as, of course, the caveat here is we don't do any self-goal. I think that is very, very important. So as long as we don't make, in simple parlance, costly mistakes or self-goal, I think we are pretty much, I think, if I can say that India is an oasis in the desert, I don't think there'll be too many naysayers right now. Because while officially it's not, raining in Mumbai or, most parts of the country, but there is actually a tsunami of foreign flows, which is already entered and it is waiting to enter. The last 3 weeks, I would have done over 3 dozen meetings all across Middle East as well as India, where I'm meeting a lot of foreign investors. And the only one question is how much, not should we. So I think that metamorphosis is what we've seen, and that's where we are.
Very well said, Lakshmi. And I think I'll pick up on 2 things you talked about. As far as the digital thing is concerned, I think that is a very important aspect, like you highlighted. I think if you think back to how the Asian tigers sort of, managed to sort of close the gap with a lot of countries, they basically leapfrogged using technology. And this is India's leapfrogging, using the digital. I think we can sort of easily leapfrog many, many generations and sort of, close that gap very easily. So I think a very important point. But I think the other point that you mentioned about self-goal, I'll sort of turn to Laura and ask her what's missing from this current mix. What kind of sort of self-goal can India do?
Okay, before I answer that, I'd just like to roll it back a little bit. I work for a rating agency, and sometimes representing a rating agency, it's akin to being the ugly stepchild, the uninvited guest, the spectre at the feast, because we are always there to be the voice of doom and gloom. And so I thought I just wanted to roll this back a little bit to basically say to you what our views are on India at the moment. And I've heard some very bullish comments while I've been here today, and I get it, and I understand it. And in terms of the trajectory, in terms of the growth story, we get it too. So maybe to share some figures with you, our growth expectation for India this year is 5.5%. For next year, it's 6.5%. It's the fastest growing of the G20 emerging market economies. And what's really interesting, and I'm picking up on some comments that were made earlier on today as well, is the inevitable comparison with China. Okay, so our growth rates for China this year, 5%, next year, 4.5%. What's really interesting is out of the past 19 years, India's growth rate has only exceeded that of China in 4 years, and never consecutively. For the future, it's going to exceed it in every single year. Now, part and parcel of that is because China is moving towards a structural slowdown. The growth of 8, 9, 10% that we've seen in the past, it's over. It's not going to happen again. And so, all of this sort of builds to the story of, is this India's time? And yeah, I think it is. It's there to embrace. But the note of caution in me says, this isn't the first time we've all said this. I've been at Moody's for 16 years. I've had this conversation at least 3 times before, and it's never quite got there. But this time, you hope that the stars are starting to align, and maybe it is India's time. But I think there could be the opportunity for own goal. I think there are things that can be done to ensure that the growth potential that we all see and we all talk about actually transpires. So, much has been said before about bureaucracy, about how gestation periods for investment are so much longer than we would see in other economies. And this still holds true. And while we recognize there has been improvement, there undoubtedly has, it still sits there. And I think this is something that we really do need to see improve to what we see elsewhere around the world. And then I think we will really be in a situation where the foreign direct investment will come on in. We will start to see this growth really materialize. And India will be able to move away from a domestic consumption-led story to something that is actually more international.
Thank you, Laura. I mean, I think, and thank you for sort of bringing the China connection in, because that was going to be my next question. Maybe I'll bring in Siddharth at this point. Siddharth, I mean, clearly China's model was investment-driven, and, China is now trying to transition to a consumption model. The progress obviously has been somewhat slow. India is blessed with a much larger consumer base. What will India's model look like? I mean, what do international investors, when they sort of compare India and China, what are the things that sort of come to their mind?
I hope you can hear me well, first of all, but good to be on this panel. So yeah, I mean, China clearly transitioning towards a more consumption-driven model, but a few things worth pointing out there. I mean, the savings rate and subsequently the investment rate in China has not really changed that much over the last few years, despite a very considerable shift towards the consumption economy. And also, in the case of India, if you look at the saving rate and consequently the investments rate as investments as a percentage of GDP, savings as a percentage of GDP, it is definitely higher than the rest of in the emerging world, but it is not really an outlier within the Asian context. So it is probably towards the lower side within Asia. And I think in order to obviously the consumption story is already strong in India, but we want more investments to happen. And for that, we need to figure out how to push consumption without really actually reducing the savings rate. The other thing I would mention is that investors, because India has been a consumption story in the past, investors are, it sort of lends itself towards an equity story rather than a fixed income story, rather than a debt story. So if you look at all the investments, large chunk of investments in India happen on the equity side. There are structural reasons for that. The demand has been very weak in terms of large projects which require long-term funding and can be funded in FX, for example, or US dollars or foreign currency. A big source of that demand, which was private corporates, I would say pre-GFC, which were acquiring companies abroad. They really stopped doing that. Private investment was pretty weak over the last 5-7 years. I mean, most of the gap was filled by public investment in India. And that, public infrastructure investment without the right framework does not really lend itself to foreign debt flows. But I would, on the other comments made by Naren and Lakshmi, I would completely agree with them in terms of, how India is probably, this is like a once in a generation opportunity. A lot of things coming together for India. Geopolitics, obviously, given issues with China, for the entire Western world, growth story. India is clearly one of the biggest or fastest growing or the fastest growing economy in G20 is, as we just heard, political stability. I think that is, not to be ignored. India has had almost 10 years of political stability. If you look at the rest of the world, from places like Turkey, which is following a very unorthodox economic policy over the last 4 or 5 years, to almost all of Latin America, which has basically moved towards the left. You have Boric in Chile, you have Petro in Colombia, AMLO in Mexico, and Lula in Brazil, etc., etc. So they're basically the entire Latin American continent has moved to the left, and the world is really looking at India as a viable democracy with political stability, with a government which kind of puts reforms at the forefront before populist measures. And I think one or two things maybe worth mentioning as well, maybe putting a few numbers around what actually Naren said earlier. Services, the improving external balance story in India is appreciated, but I don't think it's appreciated as much as, as how strong it is. So service exports, for example, there's an improvement of about $6 to $7 billion per month in terms of service export in India compared to pre-pandemic. If you look at India's exports of commercial services is up about 50% compared to pre-pandemic times, and whereas import of commercial services is down about 50%, or was up only about 20%. So it's a big gap there. In terms of the other external balances impacted by, for example, the import of Russian oil in India is not necessarily a big story from a cost advantage point of view, but it is a very significant story in terms of preserving FX. So paying for Russian oil, a slightly cheaper Russian oil in INR terms is a big benefit. So those two themselves save about $10 billion of FX for India every month, which is a pretty considerable number. And, this brings long-term, sort of FX stability, lower rates, more investments, etc. And I think the one last thing, which is also, maybe I think it is quite well appreciated within India, but outside India it is less appreciated, is the, the boost that we have seen in terms of electronics production. Just one example, because of government's production-linked incentive schemes. Just to put some more data around it, India, I think, exported around $10 billion worth of mobile phones last year, which was already double of the previous year. nearly 55% of all iPhones were built in India last year. And the phone market specifically, just to take an example of the production story, India is expected to boost annual production of mobile phones to about $130 billion in the next 2 years. Almost 60% of which will be exported. So the external balance story in India is probably poised to become even better going forward.
Thank you, Siddharth. Naren, I mean, any thoughts on this India-China sort of change? I mean, where does India sort of come up relative to China in your mind?
See, in services, I think India is far ahead of China and has been ahead and continues to be ahead. See, in manufacturing, China, we have a challenge in the sense that India is not the only country that can compete with China. We have so many other countries which are also competing with China. And I think the entire PLI scheme is a very good idea on the part of the government. How the corporates take it, how the scheme is implemented, how it moves forward is going to be one important framework. I think, overall physical infrastructure, how labor infrastructure works, a lot of things at the level of the states as well. So, if you look at it, there are states like Gujarat, which have managed to move much far ahead on the manufacturing side. But for a national movement on it, we can't have a few states alone progressing. We will need to have many more states progressing on that side. So I believe that it is still work in progress. Is it progressing? The answer is yes. Is it progress to the level that we have managed to compete? So if you look at it clearly, there are areas like, for example, generic drugs where we are very strong globally. But like what has happened in generic drugs, do we have multiple two-wheelers? For example, we are very strong globally. So are we strong like two-wheelers and generic drugs in many, many more areas? The answer is no. And it is not just China plus one. Even Europe is looking to outsource production. The way demographics is in many parts of the world, they do definitely need to shift manufacturing from high-cost places to low-cost places. But India is not the only country, and India is going to compete with other countries, and India is working hard on it. But it is not something which we can say that India has won the battle like we have won the battle in services. I think we have clearly won the battle in services.
Yeah.
In manufacturing, it is a battle which is going on, and we hope we win the battle like we have won in generic drugs.
Thank you so much. Lakshmi, I mean, your perspectives on this, I mean, obviously on the manufacturing subject, particularly with do we have the resources to be able to compete, and particularly with respect to skilled labor to be able to generate that skill? And he's absolutely right. I think India is one of the countries. None of us can sort of completely replace China, but is this a legitimate thrust area for India?
There is this dialogue. You've seen the movie Sholay? Yeah, I know, Laura, you've not seen, but there, the mother is telling the child, go to sleep, or this Gabbar is this villain in that movie, okay? And he's the bad man in the movie. So they say that, please go to sleep or Gabbar will come. Similarly, the anecdote or the joke goes that, if the Chinese kid doesn't do his or her homework, then the Indian will actually steal away the job. So when I talk about talent, now as Naren rightly said, the labor disparity or the cost disparity has also shrunk. It's not completely gone away. It's clearly showing you that the aspiring India is not only educating itself, but also adding itself exponentially into the labor force. And that is going to be the biggest boon that India will have. Anyway, we all know about the India demographic profile, so I don't really want to talk too much about it. And with this PLI, thrust, that Siddharth also spoke about, clearly there is a confluence of events and situations which are coming together to ensure that you regain your competitiveness. If you look at mid-70s to late 70s, India manufacturing and China manufacturing as the percentage of GDP, it was actually running neck to neck. And then somewhere, obviously, you call it lost the plot or lost the focus or whatever, China has gone way ahead. Now to bridge that gap, of course, Rome was not built in a day, you can't do it overnight. But do we have the essential ingredients? Have we done the right things? Are we doing the walk the talk? The answer is yes. Every time, we meet investee companies, and we are sector agnostic as far as investments go. When we meet investee companies, we're talking about all of these, and some of the brightest ideas are actually coming out of, the Indian origin. Will it be sufficient enough to cover the gap in 2, 3, 5 years? The answer is probably not. But I think that's the point in time where services will actually play the dominant role. And if you look at the recent data, if you look at services component, the non-IT component also has started playing a dominant role. And I think that is where we believe that if that progress has been achieved in the services domain, it's a matter of time that you start doing that. You have to catch up much faster because of the hibernation phase that we had for the longest time. But yeah, I am by birth be positive. Not that that should not be, but I think the positivity in terms of the data is clearly reflecting that the undercurrent still remains very strong.
Laura, can India become the factory of the world?
Potentially, but I think you talk about the bridge that we need to fill, or the gap we need to fill. I thought it's useful just to try and give some figures around this. So we estimate that there's about $150 billion worth of investment in order to improve capacity over the next 5 to 10 years. So I'm just going to pick on a couple of sectors just to sort of share some figures with you and that comparison point with China. So the steel sector at the moment, we estimate about 125 million tons worth of capacity within India. With the investment that we see coming through by 2030, that'll be at about 210 million tons. Great, that's huge growth rate. China today sits at over 1 billion tons. Cement, let's look at the cement capacity. India at the moment, about 370 million tons. By the time you get to 2030, that's up to about 550 million tons. Another strong growth story there. China today sits at about 3.5 billion tons worth of capacity. Let's look at light vehicles, and this will be the end of my list. Light vehicle capacity at the moment in India, 4.4 million vehicles. By the end of 2030, up to about 5.7. China today sits at 26.5 million vehicles. So there is, it goes back to this whole story about there is a good growth story here, but we are a long way from saying you're competing head on with China. Because remember, China's going to continue to invest as well. So all I'm doing is sharing the figures with where it sits today. So will India become the manufacturer to the world? Probably not. Will it become a manufacturer to the world? Most definitely. But I think you've got an awfully long way to go before China is anywhere near being displaced. What India is, though, is the office to the world. And I think we've all spoken about the strength of the services sector that we have here. And again, no reason to see why that would go. In fact, I see many trends and themes here that India will continue to capitalize on and leverage.
So we have about 12 minutes to go. If you have any questions, please do send them through. Use the QR code and please post your questions. I'm actually enjoying this conversation, so if you don't send me questions, I have enough to sort of go. But please do send. I would love to sort of, weave those in. Now, one of the next questions that I want to sort of get to is sort of, how do we fund this big ambition that India has? Public sector banks are perhaps on the lower side in terms of capitalization ratios. Private sector banks are well capitalized, but can the private sector banks solely fund this entire thing? Lakshmi, what are your thoughts? I mean, who's going to fund this huge ambition that we have?
So I think, Kaushik, there is this massive pool of capital which is available, not just in the banking segment. Of course, for very, very long infrastructure and long gestation projects, you require the banking sector to clearly step in, both private sector and public sector, and clearly they have been heralding the growth. If you see the credit offtake numbers, that's really a telling sign. But I would also say that in the non-banks, whether it's insurance companies, annuity, which is the terminal benefit funds like pension funds, provident funds, alternate investment funds apart from mutual funds. I think these are the 3 or 4 other funnels which are clearly emerging as I won't say competitors, but clearly complementers to the banks, which are also lending or investing into the same kind of product. So I think in terms of availability of capital, you're getting, you look at the space, in terms of the alternate investment space, the kind of growth that's happening in terms of the assets, under management, and bulk of these are also happening not just in the listed and the unlisted equity space. That's also source of capital, but also in the private credit or the performing credit space, which ranges from maybe lower end of 8-9%, goes up to 16-17%, and also extends beyond the private credit, performing credit space into the stressed assets and the structured credit space. So I think there is this gamut of opportunity, and the entities who are patronizing these are not just India's affluent high net worth, ultra high net worth institutions, individuals or domestic institutions, but also the foreign pool of capital is actually chasing these kind of opportunities. So I think the funnel is extremely strong. Indian banking system is sitting at a 7-year low as far as the the NPAs are concerned. The credit offtake, we all know the numbers, it's all in mid-teens. Maybe because of the base effect, the number might recede, but clearly that kind of growth is visible. Liquidity in the banking system is adequate. I think all of these factors together are ensuring that the pipeline is clearly. So there are certain sectors or segments, for example, where Indian banks have a limitation. But do the non-bank finance entities or do these alternate investment funds plug in, to probably fill the gap? The answer is yes. And as I said, as I travel across the length and breadth of the country to meet investee companies, we're meeting mid-market, companies which have, a top line of anywhere between maybe $200-300 million to top of maybe a little under $1 billion. And all of these entities are also coming to the capital markets, not just, being captive with the bankers. So I think there is a plethora of opportunities. It's like, a food buffet. Right from the appetizers to the salads to the gourmet main course, you also have the desserts. So you can just go ahead and take your pick.
Very nicely put. Naren, from an equity market perspective, India has a very dynamic equity market. What role does the equity market have to play here?
I don't think there's been shortage of money in equity in India. See, I think, the way India is structured at this point of time, fiscal is comfortable, current account is comfortable, inflation is comfortable, you don't make any other big policy mistake, there won't be shortage of money. But if you goof up macroeconomically or some other policy mistake, then you will have a shortage of money. But as long as you keep macro comfortable, money is not going to be a shortfall. There has never been a shortfall of money. Of course, there are some startup founders who would have mismanaged money. Will they get money? They won't get money. If we manage other people's money well, I can tell you all the people in this room will give us money. We mismanage money, they won't give us money. So I believe that it's a very simple process. And I joined ICICI Mutual Fund in 2004. We had 2,000 crores of equity assets and hybrid assets. Today we have 2,70,000 crores. So it's 135 times in 19 years. So it happened because money was not mismanaged or something like that. So if you ask me, fiscal current account inflation is managed well and no big policy mistakes we don't make, we will keep getting money from the rest of the world. There is no other part of the world which can give this kind of growth. Money will keep coming in equity, debt, any asset class we want. private equity, debt, equity, whichever asset class that we want. But it's very important to manage these three. The day we mismanage these three, like many other countries have done, then you will have a serious problem. Then even if you want money, you won't get money.
No, I think that's a very important point. And let me turn to Siddharth on this particular question. Mr. Siddharth, I mean, I think with US money markets giving you close to 5%, again, bank deposit rates going up in the West, this whole opportunity cost has become very different for emerging markets. And then we've seen sort of that flow, not necessarily reverse, but certainly that money coming into the asset class has diminished quite a bit. Countries like India, which, as Naren said, have a better economic story, should probably be better differentiated relative to others. But how do you see it from your perspective? And what will bring more money into India? How will that sort of get the whole dynamic get funded?
I mean, yeah, I think Kaushik, you make a good point, and it's if you look at the overall EM picture, it's not straightforward that money flows into EM because of what short-term rates are in the US. But India is definitely a unique story. I think India, there is, I agree with other speakers, India doesn't really have a lack of funding opportunities, obviously onshore market, we know there are AIFs and non-banks, etc. But from the offshore perspective, I think the only thing stopping India from getting more money is India itself. And why I say that is that India doesn't issue, at least in my market, for example, in the bond space, doesn't issue as much, If you look at the big indices that track EM, you'd be probably surprised to hear that the weight of India in those big indices is around 4% in the fixed income indices. It can be far higher. If Indian companies want to issue money, there are plenty of takers in this environment to lend money to India, whatever the Fed fund rates are. It's just been a lack of supply, which is an issue at the moment. And I don't, it's easy to, I don't blame issuers. I think the funding cost, the hedged funding cost the FX hedged funding cost compared to onshore borrowing cost is actually crept up. It's actually the highest it's been in the last 10 years. So it's not really economical for companies to be issuing debt abroad, and that is one of the reasons. But another sort of number to throw around is, if you look at over the last 10 years, investment grade issuers from India, and you have to remember that a lot of countries in EM actually have been downgraded from IG to high yield in the last 10 years. You have Russia, Brazil, etc. Number of big economies, Colombia last year, number of big economies have been downgraded from IG to high yield. Despite that, the proportion of investment grade bonds from India over the last 10 years have dipped by about 1%. It doesn't make sense at all. International investors will happily lend money to Indian companies, Indian IG companies or high yield companies. So it's just a matter of, the requirement being there, and they will be funded, at least in this environment.
Thanks, Siddharth. So I think we're almost running out of time. What I wanted to do is give each one of you a chance to sort of give your final thoughts on anything that, what truly excites you, or any sector that truly excites you, anything that you want to sort of, leave the audience with. Naren?
I think it's been a great thing that the government has so far been so careful in getting foreign money into debt. Maybe made Siddharth's job difficult, because what the government has said is we have got fiscal deficit, we are not a current account surplus country. Why do you get debt so easily? So we have not allowed so easily foreign debt into this country. We have allowed equity flows. I think it's been a very good decision on the part of the government. And when we meet policymakers, the way RBI has handled forex policy over the years has also been very, very careful. I think we owe it a lot that, sometimes cautious fiscal policy, monetary policy, and many things that have been done over the years has helped Indian policy stability and macro stability that it has been very easy for us to manage other people's money. Otherwise, sitting managing other people's money and the macro management goes wrong, then we are only answerable to all the people who have invested with us. So that's why we are only responsible that we have to take good credit decisions and not make stupid mistakes there. But the government, it is very important for the government to act carefully and not get caught up with lot of things and say, let's participate in trying to get money. It would have been very easy for India to get $100 billion of fixed income flows at any point of time. But India has resisted that temptation, and that's been a very good development in my opinion, although most people would argue otherwise.
Lakshmi?
No, as I said, there is a plus, there is a minus, but as long as the pros are outweighing the cons, I think that is what leads to the outcome that we all desire. We have seen the economy multiply many-fold. You were under 500 billion. Today, you are almost at $3 trillion in terms of the economic size. Can this go to $6 trillion, 7? I mean, numbers are just, as I said, Excel. But do we have all the ingredients in to get the perfect recipe? The answer is yes. At this juncture, as I said, as I meet investors both domestically as well as offshore, it is amply, evident that India seems to be that bride which people across India and the globe is chasing. Now, this bride has the right set of ingredients. She has all the perfect vital stats. It's up to her who she has to choose, and I think here it's okay to have polygamy. So that's the way I see India as a big picture.
Laura?
I mean, certainly that we see the opportunity across all sectors, and I speak to investors around the world, and you routinely hear people ask about the opportunity within India. To tie into all the various comments made, there is a lot of money and people want to invest it. They want diversity, they want yield, they want something that isn't China. And quite frankly, India is ticking a lot of boxes for people, but there is a lack of supply for cross-border issuance. And I think this is what people are looking for. Now, I appreciate a lot of companies at the moment, because of the cost element, are not going offshore. But a lot of investors out there, want the groundwork laid. They want to have these companies rated because it gets them on radar screens, and one day the rates will change and it will become cost efficient to issue offshore again. And there's a wealth of investors out there who are looking to grab part of the India story. Maybe I can sort of take a step back. When I joined Moody's 16 years ago, and I think about the APAC coverage, rated corporate coverage that we had then, it was approximately a third India, a third Indonesia, and a third China. Over that 16-year period, the number of rated corporates in India has been about 35 plus or minus. China went from about 30 over that 16-year period, even with all the defaults that we have had, up to about 250 today. So there has been a wealth of issuance from China. China has happily gone to the offshore markets. India hasn't. And I think this is part of the story that people want to embrace it. They want to embrace the opportunity, but they're not being given that opportunity.
Siddharth, you have the final word?
I mean, what I think is a very open-ended question. What excites me most about India, it's I would say on a personal level, the dynamism that you see in India is just is not seen elsewhere. I think investor across EM, I get to meet a lot of other people or see other places, and I really don't think that many places match the dynamism that you see in India on the street and in boardrooms, when you talk to people, etc. So that's very, very encouraging on a personal level. And I think on the economic side, I would say the point I raised earlier, the improvement in external balances that India will see in the next few years, I think that is slightly underappreciated. It would probably make a lot of things better for India, whether it is FX stability, lower rates, etc.
Thank you very much, Siddharth. Thank you, Laura. Thank you, Lakshmi. Thank you, Naren. This was a very great, I learned a lot just listening to all of you. Thank you very much for this fantastic panel. With that, we'll bring the session to a close. Let me invite Mr. Henrik Reber, Global Head of Credit Markets, to come and give his closing remarks. Thank you very much.